Welcome back to Income Trading 101. Today is Wednesday, March the 24th, and I'm going to take a look at some Forex today. Starting off with the British pound versus the Japanese yen. Right now it's trading around 149 yen per British pound. And I always like to think about Forex or foreign exchange relative to the other equivalents. So in this scenario, I've got the British pound, Japanese yen. I can then take a look at the Japanese yen versus the US dollar, and then the British pound versus the dollar. And in my mind, all of these have to equate to one another. So if you were to take this dollar yen and Japanese yen, dollar yen versus the pound yen, you have 108.879. Over here for the pound, you've got 149. And then if you divide those, so 149 divided by the 108 will get you the 137 for the British pound dollar. So you can always find out if markets are even close to efficient, then that triangle should add up or should divide out. It should just work out mathematically. So my then next thought is, which of these charts is the easiest for me to trade? I do like with this British pound how strong of a trend move it's had, and we've got a pullback happening right now. So definitely want to look into that a bit more. You know, the British pound US dollar is basically, you could overlay that with the Dow and the S&P, and it's going to give you a very similar outcome. Maybe not with this little pullback, but I believe the Dow is pulling back right now too. And then this dollar yen is actually really interesting as well, because the US dollar has not, this is one of the only currencies where the US dollar has not returned to its pre-COVID highs and surpassed it even. So I might come back to this dollar yen. That might make for a good trade. It's having a little bit of, we'll call it a little bit of congestion over here with pricing. So, you know, if I definitely see this congestion turn into the continuation of this upward trend, like let's take a look at 2021 and the dollar yen, and you look at the Japanese, the yen versus the pound has just been straight up until this recent pullback, but that's been a strong up move in 2021. I would expect something similar for the US dollar. So if I see price levels break out above these previous highs, I would definitely look at getting long the dollar yen, expecting it to return up here to this 112 level, you know, a bit higher, you know, more than 3 yen higher than where it currently is. So, but that's okay for now. We're going to stick to this pound yen, since that's where I started, and that's kind of what got me looking at everything. And I've already gotten rid of the volume, and I would pull it all the way back just so you, well, just for consistency, just give you a sense of where we've been here in the pound yen scenario. So you've got, you know, you've got the more recent, the 2018 high, which is about 4 yen higher than our recent high, and certainly closer to 7 yen higher than where we currently are. That would probably be your next best bet as to where we're going. Not sure that we'd get up to this 195 level, but if we do, there's a lot of money to be made on that too. So I guess it was worthwhile to go ahead and look at where we've been, because it's definitely good to know what the previous highs and whatnot were. As well, you've got, you know, in this level where we are, you've seen this play resistance back here in 18 and in 19 multiple times, It played support a little bit in 17, but this clearly is an important level that we're sitting at right now. We definitely want to be aware of that. So let's go ahead and do what we normally do. We're going to, I'm actually going to remove or pull us just past the 1 year point, which gets us out of the pre-COVID or post-COVID news fallout that the markets had, and mostly into this bullish last 12 months. So we're going to go ahead and add in the moving averages. I try to do across asset classes and whatnot. I try to use a similar methodology so that I know I'm looking at things the same and not giving special exceptions for one or the other, because oftentimes you'll see similar formations in from chart to chart that might be tradable in one chart and not tradable in the next, so, or less likely to be able to trade in the next. So no surprise here, given the run up in 2021. We see the 10-day higher than the 20, higher than the 60, which is classic for, I mean, that is the definition of an uptrend when it comes to technical analysis. But we've had a pullback, a rather significant one in the last few days. So let's go ahead and drop this down to the 1 hour and see if that, so on the 1 hour chart, it really starts to focus on the last week of trades. And in this scenario, we've seen a down move. I mean, markets started heading lower back here on the 18th of March. So about just shy of a week ago, 8 to 6 days ago. I also want to point out that Forex doesn't stop trading except for maybe a few holidays a year. So with the foreign exchange market, much like the cryptocurrency market, my 10-day, 20-day, and 60-day moving average time frames could probably be tweaked if I wanted to get them to something that was more specific, but it's okay because I can still use this. So when we're trading equities, the 10-day represents 2 weeks, whereas here, the 10-day just represents 10 days, a third of a month. 20-day is 2/3 of the month, and then the 60-day is 2 months essentially. So a little bit different view. We get the 10-day is, or the 10 period, because in this scenario it's 10 hours, is actually a lot closer to price. And then same with the 20, but you can see this crossover back here on the 18th. They both crossed the 60 and then continued to fall. So probably somewhere on the 19th, getting short would have been nice. You might have gotten chopped up over here on the 22nd, but that's okay. You still would have been chopped up, most likely with a little bit of a profit before this this last fall. I mean, this period here, the fall that we had yesterday, would have been quite nice to catch. Lots of happy people, I'm sure, traded that. We're going to drop this down now to the 30 minute. And we see here at the 30 minute, we're starting to get a little bit of a pullback. So much less clarity. I call this congestion when you've got the moving averages out of order. So the 10-day or the 10 period right now is actually between the 20 and the 60. And so a lot less decisive. I imagine in the 15-minute that it'll be a full-on uptrend. And sure enough, at the 15-minute point, the 10 is higher than the 20, is higher than the 60. However, I don't like how close in price the 10 and the 20 are, because they could still, that can still alternate. So what I would want to do is wait. If I were just using moving averages, if I were going to buy, I would want to wait until the 10 and the 20 distance themselves a little bit more, so there's a little more space between them. If you look over here during the last downtrend, and I'm looking at, let me pull this lower too. Pull it slower so you can actually see the numerical. So if you look in the upper left-hand corner, you start to see that there was a roughly 5 bip difference or so between the between the 20 and the 10. So and that maintained for quite a while, coming through here. Right now we're sitting at closer to 2 bips, and it just, these lines are just a little too close. So I want to see some more separation between them before I would look to get long. The reason I would look to get long is because we know overall that, sorry, let me fix this up. I changed the view of our graph in order to be able to see the last movement. So we know that overall we're looking at a possible pullback in an otherwise strong upward trend. So if the move is going to be upward, then you definitely want to be flexible. I don't like selling strength unless I have a significant reason to do so. So let's go ahead and get out of this. We're going to go to the MACD. Otherwise, I'll harp on that a little too much, which is quite possible. So when I look at the MACD, no surprise, we've got a little pullback here. The bigger issue for me is that we're still in the overbought category, and we've been there. So I don't trust the MACD's output right now on this daily level. Let's take it to the hourly and see if it gives us any additional indication. So on the hourly, interesting. On the hourly, you actually have a scenario where the MACD is pointing more towards a buy, and it will be a buy because it's a crossover of the MACD and the signal line. Here below, we are in the oversold category, so that appears to be going more bullish. Same, of course, with the 30-minute, and of course the 15-minute should be even more so. And look at that, the 15-minute actually had a crossover earlier today, early this morning, and it crossed into, which I love, it crossed into the overbought category. But I want to see the MACD and the signal line go positive, go above the 0 line in the MACD analysis, and it did that this earlier today. So that's a positive, actually. I think that's a sign of possibly being bullish. So let's go back to the 1 day for one more dance, one more look. And sorry, these I keep having to stretch out and condense the view just to get the data all on one screen. I will do a little bit. Normally I wouldn't do much of a Fibonacci retracement, but I do want to do a small one just to get a better idea of how much this pullback might be right now. So we're going to go from kind of this low to the high right now of that move. And you can see that this pullback hasn't even made it to the 23.6% retracement, which leads me to believe ultimately that this might not be a full pullback. It might just be sort of another leg within the sort of, if you've ever done Elliott wave, you expect prices not to go straight up, but to sort of have these momentary pullbacks like it would have here, right? Here, if we go ahead and expand that period, we had a slight 2-day pullback before it went higher. We could be having a longer pullback right now that still is less relevant than a full pullback. Now I can see just by looking at it, but we are definitely outside of the previous channel, right? So I can draw this, actually, let's see, I don't like that channel. We're going to draw it from here. Going to change the angle to get as much data as I can in before I render my judgment against this down move. Ultimately, Let's expand that out. Expand this out a little bit so that we can easily see it. So you can see this upward trend. We obviously are outside of that channel right now, but that's really for us to know. We could easily end up pulling higher again until we have a more significant fallout of price. I'd be very hesitant to actually go ahead and get short this. I would still lean long. Let's do a Fibonacci, a retracement of this smaller, where'd it go? There you go. Of this smaller move upwards from here over to here, this top. So if I do that one, then we have reached this 23.6% level, and you could probably expect prices to go ahead and go higher. So I'm not prone to short this British pound, Japanese yen. I'd be more likely to get long it just because of the history and the price level that we're at. So let's go ahead and condense all of this again and start where go back to where we looked at the start of this, which is looking at the larger picture and getting a better sense of where we are in price overall. So this red line, I don't even have to draw a line. This red line going across is where we're trading right now. And just look at how many times that line or that price point has had some significance with regards to, retracement, not retracement, but support and resistance. So we've got resistance, 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 little support. I mean, this is very, very important. So I would probably wait for us to get a little higher than where we are today to look to get long this. But if you look at the shorter time frames, we've already started to head higher. We'll just have to see if it's going to continue. So that's it for today's video. Thank you so much for watching. Definitely subscribe to the channel if you haven't already. And I look forward to making more videos soon. Thanks for following. Bye-bye. Happy trading.